What's up, investors and money talk friends? Welcome to yet another YouTube video. In today's video, guys, we're going to be talking about the state of the market. That's right, the market is looking good, or at least it's looking better, okay? But however, all of this could turn around in the upcoming days, okay? I'm going to be explaining to you guys what are some catalysts that could potentially flip the stock market absolutely on its head all over again, like we were experiencing last week, and maybe we could get some more dip buying opportunities. Now, for those that don't know who Money Talk is, for the previous 6 years, guys, when I started trading, for the first 2 years, I was very unprofitable. Okay, I was losing money consistently, and it wasn't a good look, and I was actually very depressed until I learned. That's it. Until I learned. That's really all there is, right? And for the previous 4 years, I've been consistently green in the stock market. And I've been trying to kind of spread this knowledge around and kind of help people also maybe not make the same mistakes I made and etc. And also kind of give you guys my opinions and things. Now, I don't have a course to sell you guys, so don't think I'm telling you about me he's gonna pitch a course, okay? No, I don't have a course to sell you guys, and all the teachings that I have are here for free on YouTube, okay? But however, if you guys want direct access to my trailers, you can find the link down below in the comment section. That's my Discord community, right? We also do $200 a month giveaway to everybody in the group, so make sure you guys check that out. It also comes with a one-on-one access to me, Money Talk. So if you guys want that, you guys find that. You can find that in the comment section, pinned comment. It's my comment. So without further ado, guys, let's get talking about the state of the market. The market. All right, the market. That sounds like a name. I don't know from where. The market. Maybe Eastern Europe name. Maybe it could be. Okay, so the market. All right. No, but seriously, the market is looking very healthy, guys. It's looking very risk on, and you know it's looking risk on when we get all these short squeeze plays and momentum plays going crazy, right? We have AMC up, we have GME not up anymore because their earnings came out, and I guess people were not so impressed by them. All the growth sectors up, BBIG is up. I mean, the stock market's looking pretty green today, okay? And we kind of deserve this green considering the slaughter that we had last week. But what was last week's slaughter all about? And are we going to see that in the upcoming weeks ahead is what we're going to be talking about. And personally, unfortunately, I do believe so, okay? I believe that we're going to get another mass overreaction from the market in the upcoming weeks. Why? Okay, so first of all, tomorrow or the day after, I'm pretty sure it's Friday, right? On Friday, we're going to get that, depending on when I drop this video. That's why I don't know what day it is, okay? So either tomorrow or the day after on Friday, we are going to get the CPI data released, okay? Now, what is the CPI? The CPI is basically the inflation rate. Okay, this is basically the inflation rate. And this is very important because depending on what the inflation rate is, we're going to hear what Jerome Powell has to say next week. Now, I'll get to why what Jerome Powell has to say is important, and who the hell even is Jerome Powell for those that don't know. Jerome Powell is the head of the Federal Reserve, and he's basically in charge of the money printing machine or the take your money away machine, okay? One of the two, depending on how he's feeling on the given day. Now, how he's feeling depends on how the inflation data, aka the CPI, which is coming out tomorrow or the day after, depends on. Okay, that's what it depends on. Now, what was I saying regarding inflation and etc.? Yeah, so the CPI data is coming out next week, and depending on what are we looking for in the CPI data? We want the CPI data to stay somewhat consolidating around the levels that it's been at, okay? If we get yet another spike up, this is going to be horrendous. The market is going to look absolutely bloody, all right? We either want an inflection point to the downside, or we want it to be maybe a little bit up, maybe a one small measly like 0.5% to 1% up, right? But we do not want it to be up like crazy from the previous month that we had, okay? So that is really important, and we kind of want them to hit their projections as well, right? The projections are what matter the most, because if they don't hit their projections, then we are basically in trouble, and the Fed needs to react and people need to overreact. And as we know, any reaction in the stock market is an overreaction. Literally any reaction in the stock market is an overreaction, whether you're selling or when you're selling, basically, because when you're buying, it could also be an overreaction, right? Because people get, I mean, the stock market is filled with overreaction and just people just pushing the limit. If there's good news, people are like, buy, 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 send it to the moon. This stock should probably stop at $3. It's probably worth $3. Nope, send it to $30. And then when there's bad news, people are like, sell, 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 sell. This stock is probably worth $5. Nope, send it to 50 cents. Okay, and that's what we get. And as good traders, guys, this is one of the things that I realized, that the market is very inefficient, and it is our job as good traders to find these inefficiencies and take advantage of them. All right, buy when there's blood on the street. Okay, that's it. Buy the dip, buy when others are panicking, and panic when others are buying, or whatever Warren Buffett said. I forgot. Okay, I'm sorry. So basically, guys, that's what we want. Now, why do we want that, and what does this matter? Why do we want it to kind of either stay the same, not go high, or go lower? That's because, guys, Jerome Powell has been saying that, look, guys, inflation is transitory. Inflation is transitory. Well, he's not really saying that anymore, but still, he's been saying that. He's been saying inflation is transitory, and inflation is going to kind of come in these spikes, right? And it's somewhat like COVID. Do you guys remember when COVID first came out? Not COVID 2, not COVID 3, the original COVID-19 period. Not the Delta or the Zelta or the Omicron or the freaking tomato cron, okay? Just COVID-19. When it came out, people were like, dude, what we need to do right now is flatten the curve. That means we're going to get this spike, and then over time, it's going to kind of flatten itself out. Okay, and that's what we're looking for in inflation data as well. We want inflation to kind of flatten itself out. So what we're looking for right now is either for it, because right now we're still on this trajectory of it going up. Okay, we haven't even reached the top of the hill yet. Okay, so we want it to either reach the top of the hill and kind of consolidate around these levels, or we want us to kind of feel like, okay, well, it's gone up, now it's coming down. Right? So that's what we're looking for in the inflation data today. Now, what does that matter, and what is going to happen next week? Well, depending on how the inflation data comes out, guys, Jerome Powell is going to have to make a decision next week, and he's going to give a speech whether he's going to be hawkish. Hawkish means his language is going to indicate that he's going to be raising the interest rates. Now, dovish means that he's not going to do that, and he's going to kind of hold back, and he's not going to raise the interest rates, and he's going to maybe print more money or something like that, right? And on the other hand, when you look at the Federal Reserve or Congress, they actually just decided to let me just find the article real quick. Yeah, so the House passes bill opening way to quick debt ceiling increase, right? I mean, the House just passed the bill that they can just borrow more money very quickly without even having to go through the actual process of, are we going to vote on it? Are we not going to vote on it? Which kind of makes sense, because every single time these guys, what they do is they just vote on increasing the debt ceiling anyways, right? So what does it matter if 50 people vote or if it's just one person saying up, right? That doesn't really matter. So next week, depending on what Jerome Powell has to say, the stock market is also going to go into a massive shock, either upwards or downwards, okay? So expect the best, but prepare for the worst, okay? If you have some green stocks, maybe take some profits, maybe hedge it a little bit, save some cash, so in case we get yet another dip buying opportunity, you guys can jump on that opportunity and buy the dip, okay? That we might see. Or I'm telling you guys, listen, another thing I've learned in the stock market, okay? There's always going to be a buy opportunity coming. There's always going to be another buy opportunity coming. Does that make sense? So if next week, if you hedge some of your positions, you take some cash, you save some cash, and next week the stock market goes absolutely ballistic, understand that there's going to be yet another downwards catalyst for the market that is going to give you the opportunity to buy the dip. And when you have that mindset, you get out of the famine or the famine. I don't know how to say that word, right? It's basically super hungry people, unfortunately, right? Mentality, right? You understand that, look, I'm going to trade the best and I'm going to leave the rest. That's what I'm going to do. I'm going to buy at a price that I want to buy at, and I'm not going to do anything else. I'm not going to do anything. I'm not going to buy 10% above. I'm not going to buy 50% below. I'm going to enter the price that I want to get in at. I'm going to find the best dip and I'm going to execute on that dip. Okay, so I'm not going to chase. That stops you from chasing, guys. That's one thing that I've realized. right? Because, and listen, man, listen, this takes, I'm saying it like it's easy, but this takes years of discipline, okay? This takes years of understanding that the stock market is all an emotional game, okay? It is all an emotional game, and at the end of the day, it's you versus you. It's not you versus the market, it's you versus you. Okay, so, and that's the thing, right? So next week, Jerome Powell has to come out and say whether or not he's raising the rates or not. Now, the interest rates, how do the interest rates affect the market? Well, guys, when interest rates go up, the cost of borrowing money goes up, right? And when the cost of borrowing money goes up, the cost of borrowing money from the banks also goes up. Okay, so that means the banks now need to pay more in order to borrow money from the Fed in order to borrow it to you. Now, what do the banks do? Do the banks go, nah, we don't, I guess we're losing money if the rates are going up, I guess we're losing money? No, they just pass it along to you guys, to us guys, the consumer, right? They take the interest rates and they even raise it a little bit more so they can make even more profit now. And then your mortgages go up, your credit cards go up, and etc. And growth stocks prices go down. Okay, the growth sector looks like a freaking bloodbath, and that's what happens. So with that being said, guys, keep that in mind. And of course, look, bank stocks and etc. are gonna go up, right? Energy stocks maybe go up a little bit and etc. But it's just not good for the market. Okay, it's just not good for the market as a whole. Now, of course, it doesn't affect all the stocks, but most of the stocks are hurt by interest rates going up because people are like, dude, you're telling me to invest, but I don't have rent money. I don't have money for freaking my mortgage. I don't have money for my credit card. What am I going to invest with? Right? So that's something to be aware of, guys. Next week is going to be massive for the stock market. With that being said, this is not financial advice. Now, am I saying that to dodge responsibility and not get sued? Absolutely, baby. No. But seriously, first of all, don't sue me. All right? Don't be that guy that comes, I watched the YouTube video. He told me to sell. I lose money. No. I don't care. Okay? Don't even send me no subpoena, no none of that. All right? What I say this for, what I say I'm not a financial advisor for, is for you to understand that, look, this is not all your due diligence. Do some other research. Maybe even watch some other YouTubers. Those guys aren't giving you financial advice either. But at least you get to see multiple people's opinions and perspectives on the market. Okay, so with that being said, if you guys enjoyed my perspective and if you guys understood clearly, at least I tried to explain it clearly, right? Make sure you guys smash the like button and share this video to some other investors so they also understand what is coming up for them. With that being said, guys, thank you for watching. Money Talk.